Welcome to this week's Market Update, where we review what moved markets, highlight what drove our performance, and look ahead to the week to come. Let's start with the consumer. Inflation-adjusted U.S. spending rose 0.3% in May, while personal income climbed 0.7%, and real disposable income posted its first increase of the year. With consumers driving roughly two-thirds of the economy, this resilience, backed by a healthy job market and steady wages, is a constructive sign for corporate earnings. Even as prices stay elevated, households are becoming more selective rather than pulling back entirely, which reinforces our focus on high-quality companies. Next, AI is shifting from an investment story into a revenue story. For the first time, quarterly global AI revenue outside of China surpassed the estimated depreciation costs of AI infrastructure. This is a milestone showing that these enormous investments are starting to pay off. Leaders like Microsoft, Amazon, Google, and Meta keep driving the build-out, with future data center lease commitments now topping $850 billion. For investors, the opportunity reaches well beyond chip makers into cloud, software, energy, and digital services. Equity markets moved higher as investors welcomed resilient data and encouraging corporate outlooks. Technology shares led after Micron delivered stronger than expected guidance, while first quarter GDP was revised up to an annualized 2.1%, while Treasury yields stayed relatively stable. The fundamentals, resilient earnings, healthy demand, and improving productivity remain supportive of diversified portfolios built around high-quality businesses, the kind of backdrop that rewards a disciplined, long-term approach. Now let's look at what drove our performance over the past week. Novo Nordisk was our top performer, advancing over 9% as sentiment improved around its obesity and diabetes franchise. The rebound reflects renewed confidence that Novo can defend its leadership in the GLP-1 market while advancing its next generation of treatments. With demand for metabolic disease therapies expected to stay structurally strong, Novo remains well-positioned to benefit from long-term healthcare spending. On that topic, healthcare led our sectors, supported by Novo and steady demand for defensive growth companies. Investors continue to favor innovative pharmaceutical and biotech businesses that can deliver durable earnings regardless of the economic backdrop. Structural drivers like aging populations, rising chronic disease, and ongoing innovation in obesity, diabetes, and specialty therapeutics support the sector's long-term outlook. Our momentum strategy was the week's strongest quantitative style, as investors rewarded companies with improving earnings expectations and positive price trends. Leadership stayed concentrated in strong, resilient businesses with visible growth drivers, including names like Booking Holdings, Caterpillar, and CME Group. While momentum can be volatile during market rotations, we stay focused on high-quality names alongside ongoing valuation discipline. And finally, here's what we're watching in the week ahead. Tuesday brings the latest U.S. job openings report, which is a clear gauge of labor demand. The most recent reading rose to over 7.6 million, which was the highest reading since late 2024 and well above expectations. This was led by professional and business services. Strong demand for workers supports incomes, spending, and making this a useful read on the broader economy. Wednesday's ISM Manufacturing report gives us a timely look at the factory sector. The most recent reading rose to 54, which was the strongest expansion since 2022, with new orders and production accelerating. A healthy factory sector tends to support employment and corporate profits, so we'll be watching that one closely. On Thursday, we get the employment report ahead of the July 4th holiday, which also includes the unemployment rate, which was a key measure of labor market health. The most recent reading held steady at 4.3%, with employment rising and broader measures easing slightly. Steady jobs naturally underpin consumer spending and corporate profits, making this one of the most important indicators for equity markets. As always, we stay focused on helping you achieve your long-term financial goals through disciplined, thoughtful investing. Thank you for joining us, and we'll see you next week.